Hello guys, this is Ride On Academia. Today we are looking at our bank reconciliation statement using our adjusted cash book. Okay, now our adjusted cash book is simply a record that shows our cash book balance and the other adjustment or correction made to it. Now in our adjusted cash book, we try to remake our cash book. Alright, we are trying to remake our cash book. We'll be entering in all the adjustment needed. The only entry not included in our adjusted cash book is our unpresented check and our uncredited check. Okay, those are the only two entries not included. Now when you have a balance that has when our cash book has a debit balance, right, now we can easily say that our balance will be here, our balance will be here. That is when our cash book has a debit balance. So let's assume it is SS. I'm trying to give us the format of an adjusted cash book. Okay, now this is our debit side of a cash book. Alright, our adjusted cash book is still a cash book. Alright, it's still our cash book, but we have made certain corrections to it. So this, let's say our cash book has a debit balance, like I said. So our balance further is here. That means this is a debit balance. Okay, now in our cash book, our credit side is for giving out, our debit side is for receiving, right? So everything that has to do with income, like your credit transfer.
So now, how can we integrate this one now?
Your credit transfer is debited, your dividend
We respect
is debited, okay, and other incomes. Now let's say for our credit side, we have our standing order. Okay, our standing order is credited. Okay, our bank charges, which are expenses, alright, on the business. Our bank charges,
this DX will cancel this one.
they are also credited.
This one cancel this one.
Maybe your direct debit, alright,
And then here you are
they are also credited. Now if you have not watched our videos on the theory aspect, please do well to do so that you can understand where all these technologies are coming from, right? Now so this is our credit side. What we are saying is all the entries that pertains to expenses, all the adjustments that pertains to expenses, we credit them, while all the adjustments or all the entries that pertains to income, we debit them. Okay, so when we do that, we'll be having a balance. Alright, our balance carry down.
So integrating X, you have X.
Alright, let's assume that's our balance carry down.
Divide by 1.
So that here we also balance. Okay,
And so when you
so we'll use this balance as our adjusted cash book balance. Okay, which is our balance as per adjusted cash book. That's what we'll be using in preparing our bank reconciliation statement. Our balance as the adjusted cash book.
So now, F, these two will go you have F
Okay, and here we just simply add. Now we just simply add. For when we have a debit balance, right, we just simply add our unpresented check.
So now, instead of
Right, we add our unpresented check
implicit, it is not standing.
and we less uncredited check.
You understand? This is an immediate. Once it is mixed, it can mix it to one implicit. So instead of
When we less our uncredited check, the balance we'll be having will be equal to our balance as per bank statement. We'll be having our balance as per bank
they are
statement.
both flawed. For the instead of the constant, we are holding in both functions now.
And that's how easy it is. So this adjusted cash book is what many entries or many questions now demand from us. So here you just create your cash book again, make certain adjustments to it. Like I said, the only entry not entered in our adjusted cash book is our unpresented check and our uncredited check. Every other entry is entered in, and then you know whether it is an expense or an income, alright, following the rules of double entry, right? So now Given this format, we'll be taking a question. Now, for example, if our balance was a credit balance, it will be coming to this point, right? It will be at the credit side. Then every other entry remains constant, both income debited and expenses credited. Alright? So we'll be taking a question and then we'll be solving for adjusted cash book. Okay, so we have an illustration here. On 30th of November 1993, Olukumi and Sons cash book showed a debit balance of 3,500. Now remember, a debit balance, okay, of 3,500, whereas the bank statement showed a balance of 2,325 naira. On investigation, the following items were discovered to have caused the difference. First, the bank had made charges of 310 naira, which had not been entered in the cash book. Second, a check received for 2,000 naira entered in the cash book had not been entered in the bank until December 3rd, 1993. So that's an uncredited check, okay? It has been received and entered in the cash book by the business, but the bank has not yet credited it, okay? Now, C, a standing order for subscription of 150 naira has been entered in the bank statement as paid, but not in the cash book. So that's a standing order. The fourth one, the following checks were drawn, but not yet presented, okay, for payment in the bank. We have checks for 300 naira, 600 naira, and 250. That's our unpresented check. Now we have a check drawn for 50 naira has been entered as 60 naira. Alright, so we have F, a check for 35 naira previously received and paid into the bank has been returned by the bank. That's a dishonor check. And the last one, a customer paid 160 naira directly into their account in the bank. It has not been entered in the cash book. So that's a credit transfer. Now, we are required to prepare one, the adjusted cash book, and number two is our bank reconciliation statement as at 30th November 1993, okay? So the first thing we'll be doing will be making our adjusted cash book. Like I said, okay, like I said, our adjusted cash book is simply we are making another cash book with our cash book balance and making adjustments. So the name of our account is Olukumi, right, and Sons. The name of our account. This is our adjusted cash book. Quickly, now we had that it showed a debit balance, okay? That means we'll be entering that on the debit side. Our balance brought forward will be on our debit side. Now we have a debit balance of 3,500 naira, okay, and a bank statement that shows the balance. That one will come to it when we are treating our bank reconciliation statement. So let's leave that aside. The first, the bank had made charges, so that's bank charges. Since it is charges, we are going to be crediting that account. Alright, that's an expenses for the business. Bank charges amounting to 310 naira. That's for the first one. The second one, a check received for 2,000 naira. That's uncredited check. So believing that, like I said, the only thing not included in our adjusted cash book is our unpresented check and uncredited check, okay? So we're going to be leaving that. The next one is a standing order. That's an expenses. So we'll be crediting our account. A standing order for 150 naira. Okay. So a standing order for 150 naira. The next one we have is, okay, the following checks were drawn but not yet presented for payment. That's unpresented check. So we're going to be leaving that aside. Okay, so we have a check drawn for 50 naira has been entered at 60 naira. Now the business has drawn a check for somebody at 50 naira, okay, but they mistakenly credited themselves with 60 naira. So we're going, and why there was an overstatement or overcast, right, of our payment. So we'll be returning our 10 naira back as was income. So this is an error of what? Overcast. Our overcast of payment, right? And it's what? 10 naira. So that error has been corrected. Okay, let's go on. A check for 35 naira previously received and paid into the bank had been returned by the bank. Okay, so that means it was dishonored because it was paid in but the bank rejected it. Now our dishonored check, we see them as expenses, alright, because the business thought they had received it. Because the business had previously received this and debited their account, alright, but it was now rejected by the bank. So we'll be lessing that from our business income, alright. Now G, a customer paid 160 naira directly into their bank account. So that's a credit transfer. They paid directly into the bank account. It has not been entered in the cash book. So that's a credit transfer, which is an income. Okay, we have our credit transfer. Like I said, if you've not watched our videos to know how or to understand our terms, please do so that you know why we are debiting and why we are crediting, and you also know the meanings of our terms. Okay, so that's it. So we are through with the adjusted account. We are going to get our balances. We are going to be getting our balances. Okay, so like we do in our cash book, we'll just total our credit side and our debit side. Alright, so for our debit balance, we'll be having 3,500 plus 10 naira plus 160 naira. Alright, and that will be giving us 3,670 naira. Okay, for our credit balance, we'll be adding 310 naira plus 150 naira plus 35 naira, and that will be giving us 5, 9, and 4. Alright, so our balance now, since the debit side exceeds our credit side, our balance will be the debit total less our credit total. Alright, and now we are having a balance carry down of 3,175 naira. Alright, so this should add up to give us a balanced account that will give us a balanced account. Alright, and this total must tally with here. We already solved it here, so we have 3,670 naira. Therefore our balance, okay, since our carry down is here, our draw down will be on the debit side. Okay, so that means we are having a debit balance. Our balance brought down is 3,175 naira. Alright, now this is what we are going to be using in calculating or in preparing our bank reconciliation statement. Alright, so we are going to be taking our balance as per adjusted cash book. Alright, adjusted cash book, and our balance is 3,175 naira. Alright, what we need to do is to add, since it's a debit balance, we are going to add our unpresented check. Now from our text, we had 3 figures given for unpresented check. We were given, if you look at your D, we were given a figure 300 naira, 600 naira, and 250 naira. Okay, so our unpresented check will be summing that up, and that will be giving us 1,150 naira. Alright, so we'll be summing that 1,150 naira. We'll add this up to have 4,325 naira. Now we are going to be lessing our uncredited check. Alright, we're going to be letting our uncredited check, and according to B, our uncredited check is 2,000 naira. Alright, so we less our 2,000 naira, and when we less that, we have a balance of 2,325 naira. Now, if you go back to our question, we are told that the bank statement showed a balance of what? 2,325 naira. So that is our balance as per bank statement. Alright, this is our balance as per bank statement. Okay, so this is our adjusted cash book using, this is our bank reconciliation statement using our adjusted cash book. So with this, we've come to the end of this edition, bank reconciliation statement. If this video has been helpful to you, don't forget to subscribe if you haven't, like our videos, give us a comment, give us a thumbs up, okay, and then share with those who are interested. See you in our next video. Thank you.